Great, that was Berit Svedsen all the way from Norway. Thanks a lot, Berit. Not to be confused with Svedsen from Sweden. Thanks for your time. Appreciate the presentation. VIPs, everyone. One more round of applause. Women in tech, Norwegians in tech. I hope you didn't miss me too much. My name is Jordan French. I'm a journalist from New York. Founder and executive editor at Grit Daily News, covers all things brands. Also on the editorial staff at thestreet.com. Next up with me, again, you're in the right place, and I know some of you are coming and going. Come make your way up front. There's plenty of seats in the front row. I know we have a packed house. We're expected to have a packed house, standing room only for this panel. I'll share why in just a moment. If we could pop up the screen. No way everyone can, for those that just read, can read names as well. Awesome. So for you, those just coming in, my name is Jordan French. I'm on the editorial staff at thestreet.com, executive editor at Grit Daily, a journalist from New York. Next, exciting and dear to my heart, in the fintech space, a lot of change is afoot. There are many startups potentially encroaching or possibly partners to big legacy financial institutions. We're going to hear more about that from our panelists. So without further delay, first, Vanya Manova here. She's a country manager of Bulgaria, here with us today with a MasterCard. Thanks again for joining us, Vanya. Have a seat here. Appreciate it for Vanya. And any seat you like. They're unclaimed. John Soberg's with us here from Mitsui, otherwise known as MS&AD. Here, he's been investing a lot. We're going to be hearing a lot about risk tech from John. John, grab a seat. Laurence Krieger's here with us from Startup Tide, COO, Laurence, Challenger and a Challenger Bank. Thanks for joining us, Laurence. Grab a seat wherever you'd like. And last but not least, we have actually, I'm going to grab one more seat. Pedro Coelho here. He's the CEO. He's the executive chairman as well of Banco BNI. They're in Portugal. Pedro, come on up. I'm going to shake your hand and then grab you a seat right here. Thanks so much, Pedro, for joining us. And last but not least, who's not with us? Oh, Benedikt with Raisin, who's raising interest rates for deposit holders. We'll talk about that a bit too. Benedikt, have a seat right next to me. And I want to start with you, Vanya.
Ladies first.
Ladies first, and then I'm going to get to you really quickly, John, because, or rather, was it John? You have, oh, no, not John. Laurence, you had news for us, right?
Yeah.
You do. But let's talk to Van. Let's let Vanya shape the dialogue first, and I want to get to your news because it's very cool. Relates to Bulgaria, where she's from. Just to lay some foundation. MasterCard's got billions of users. We heard earlier from Gabriel, tens of thousands of clients. But change, like I said, is nonetheless afoot. Share your thoughts from a really high level. From earlier saying you welcome it. You welcome the new entrants like the Tides and the Raisins of the world. Is that right?
This is absolutely correct. We are not only welcoming, but we are hardly supporting the new entrants because this is how the competition is driven. And many people are calling these newcomers disruptors. I don't consider them disruptors at all. For me, they are enablers, and also they are motivators for the other players to move. To make moves in order to meet customers' expectation. Because in the new reality, the most important thing is the customer convenience and customer trust. And where the convenience is, and usually it is combined with the technology, there is the usage.
It's certainly, and some of those customers are of MasterCard are right here in Bulgaria. John, I know you have some news to share. I'm sorry, not John. Laurence, I know you have some news to share with the audience specifically about here in Sofia. Maybe I have to set...
John might have news as well. I don't know. So
John probably has news. John always has news, but But Laurence,
Yeah, so I mean, for those of you who don't know us, so Tide, we're a challenger bank or a near bank in the UK. We're definitely the fastest growing, biggest bank for SMEs. That's what we do. So we're just focused on the business market, not the retail market. Just to give you a bit of an idea, we now have more business customers per month than any bank in the UK. So we have more customers coming into us than RBS, NatWest, for example. And we're growing incredibly fast. And because we're growing fast, we're investing elsewhere. And the news really is that we're investing in Sofia. So we've just opened an office in Sofia. We have 50 people now here. By the end of the year, we'll be at least 150 in Sofia. So we are growing. We're investing in this country. I think it's an amazing country, by the way.
Yeah,
so
good. Round of applause for Laurence.
And also with that, anyone who is interested in working for us in Sofia, please come and find me after this.
And thanks for initiating us on what Tide does. Laurence, also right next to me, though, for those who don't know Raisin, for the uninitiated, if you could just, Benedikt, what you do is fascinating. Some people here might already be clients, but for those who aren't, what does Raisin do?
So Raisin is a marketplace for deposits for all over Europe. So basically, if you were a saver in Europe, on average, you got returns in terms of 0.3% on your money. And what we are doing is offering much higher interest rates for the saver on fixed-term deposits, overnight accounts. And we are doing that by connecting the saver with banks from all over Europe. So basically, we have a lot of banks that come from everywhere, like Bulgaria, where actually our first bank came from, to Portugal. And I'm happy that Pedro, who's here today, is also working with us, partnering with us, and offering their products all over Europe to savers.
And certainly, thanks for sharing that. So just distilled higher deposit rates, and I'm glad it was a beautiful segue because you mentioned Pedro. Pedro's here with us with BNI, one of the biggest banks in Portugal, if not the biggest, one of the biggest in Portugal. And Pedro, at first blush, someone would think new technology, new entrants, that's scary. That can disrupt an existing industry. But from so far, you welcome it. Is that correct? Can you share more on that?
Yes, I think for us it's important to realize that banking for a long time was monolithic and vertical, and you would expect banks to offer a universal banking solution. And nowadays, as you know, we're going through the open banking, although everyone talks about open banking, but actually before we talked about open banking, BNI Europa was already doing it. A good example is with Raisin. So we started by actually diversifying our deposit base away from Portugal. Apart from getting depositors in Portugal, we also get it across Europe. We are now getting even in the UK as well and in Switzerland. And on the other side, we also are able to attract clients to actually deposit with Raisin through their platform in other banks across Europe. So we not only allow international clients to deposit with us, but also we allow Portuguese clients to actually deposit with third-party banks, because we don't see ourselves as a competitor to the banks abroad. We see ourselves as a platform that actually provides services across a different range of products.
Yeah, and that's important. And still with you, Pedro. People are benefiting. They're better off, perhaps, financially as a result of these collaborations.
Yes, correct. I would believe that the future model of banking, like a bit like what happened in asset management, you have to have an open platform. You're not able to be good at everything. Nowadays, for instance, in a market like the UK, more than 50% of clients, before they take a mortgage, they actually go to an aggregator, a comparison site. So even if you bank with Barclays, you end up with your mortgage with the best possible terms that the aggregator will tell you. So effectively, there's not a real loyalty. So it's really tough out there for banks nowadays, because they still are trying to keep the clients based on one or two anchor products. But we believe the future is open, and the clients are smarter, and they go on the websites, they check the conditions for depending on the products they are looking for. And what we are trying to do is basically to enable the client to get the best choice depending on the product, and being able to advise the client, because ultimately it's very important for a banking institution being more of a risk manager and an advisor to the ultimate client.
And it's not just important for traditional banking, but also for insurance, which is why John's with us. People see MS&AD Ventures, that's the funding arm of probably more popularly known insurance giant Mitsui, which begs the question, John, insurance has been a rather lucrative but also sleepy industry, but things have changed. How?
Yeah. Well, so I'll start. So I don't actually really work in insurance. I'm straight up a VC at this point. I've been doing fintech investing for almost the past 10 years now. So it goes back before I would call insurtech wasn't a word when I started. Fintech wasn't a word either at that point. It's kind of taken off. But what we see is, you know, with the, especially in the last decade, with the ability to take massive amounts of data and apply it to problems, and especially you mentioned risk tech. That's a term that I use sometimes. In the US, for example, underwriting for personal loans has gone about 50% to tech companies now. So, you know, 5 years ago it was 5% with tech companies. We expect that the same thing's going to happen for insurance. It just makes sense that you're going to be able to price risk better when you have massive amounts of data. So I think this sleepy industry is going to change. I think we're going to see a bunch of new products too. So I'm very excited about the innovation.
And certainly, John, and John mentioned data. Laurence, that's something that you use extensively, take advantage of to differentiate yourself a bit from other banks. If you could just explain, though, as a self-styled challenger bank, how do you operate differently? What do you offer that's different from a traditional bank that's attempting to serve small, medium businesses?
Sure. So what we offer different is that, firstly, we've gone at it from a completely different angle. So if you think about your traditional business bank account, actually, what are they? They're really, normally they're just repurposed consumer accounts for business. So very often it's the same thing that you find on your retail account, rebadged with a business stamp on it. And that's worked in the past, but actually if you think about it, especially the SME sector, not the corporate sector, the very big companies always get the best service from their banks because they're very profitable. But the SMEs, the small to medium-sized businesses, they're the ones that are actually being massively underserved. So the way we're going at it is we're fully focused, solely focused on the SME space. And because we're fully focused and because we're tech first, we're building essentially a platform which is around the SME rather than just trying to repurpose something. And what do I mean by that? The core to the platform is the banking services. So we offer everything that a normal bank would offer. So it's, you know, your account, your MasterCard, and a number of other services like FX and standing orders and direct debits and all the kind of stuff you'd expect. But for us, that's just the start. What we then do is around the data and around the banking services, in other words, the payment services, we then build value-added technology that gives, and this is really our mission, it gives our members, our customers, back their time. So in other words, it's a lot of it is the kind of boring admin stuff around banking that people don't want to do. We'll take care of that, whether that is auto-generating invoices, chasing those invoices, sending the data into the accounting platform so you don't need to do that, snapping a receipt and then that auto tags to your transaction and then that data again gets sent to your accounting platform. So what we do is we basically take away a lot of the boring pain that founders and business owners tend to do a lot of their time and they don't really want to do it, and that's why we're growing so fast. I think with that, just looking at the panel that we're on and coming back to a question earlier, I want to pick up on something that Vanya said, which is that she said that she doesn't see us as disruptors. And I get that from MasterCard's point of view, because from MasterCard's point of view, some of the biggest neobanks are working with MasterCard or Visa. But actually, I disagree that we're not disruptors. I really do think that right now we're in a completely different place. In fact, I've been in tech since, well, too long, because I'm pretty old and grey-haired, but since '94. And if I think about that journey, the first disruptor in terms of retail was Amazon, and they sold books. And the reason they sold books was because it was the most logical, easiest thing to sell online. You didn't have to touch it, you didn't have to feel it. It could get in an envelope and you could be posted through your door. And it was the most logical thing to disrupt. Since then, pretty much every industry sector has been disrupted by the internet and by what we call digital. And you can see it from all the way through to, blockbuster video being disrupted by Netflix, music being disrupted by Spotify, etc. The interesting thing is that the biggest, most profitable sector, which is banking, was one of the last to be disrupted. And I really do think right now we're going through disruption, and this is just the beginning. And I think what you'll start to see in both the retail space and the business space is mass disruption of traditional banks.
It sounds like for Laurence, the tide perhaps is coming. Laurence also mentioned, Benedikt, technology, and so far we've laid some foundation on Raisin really quickly. You're claiming higher deposit rates than what are otherwise offered at traditional banks. Some have partnered with you. BNI is one example. And just to really quickly illustrate that, if you could just to demonstrate to people, perhaps Germany's an example, very low deposit rates. Could you share some of the numbers just really quickly to show the delta or difference between what Raisin's offered and traditional deposit institutions?
Yeah, so the German saver, depending on which bank he is, and he can get 0.3 or even 0.0. There's some banks that are not paying any interest to their customers. And with us, they can get up to 2.2% on 5-year fixed-term deposits.
Right, so it's a pretty stark contrast. It's like a 200 basis point difference. Going back to Laurence's mentioned technology, what's going into that? What's causing that difference? Is it purely that you have some technology at work, or is there more to it?
Yeah, so I think one common theme now over the last couple of minutes was like, so why are fintechs different, or what is differentiating them? And I think a lot of the things that come with this disruption, be it Amazon, be it Spotify, be it Raisin, be it Tide, is around convenience. So like, you want to give a good customer experience. You want that the users are actually becoming loyal on a specialty product, and that maybe it's not good enough to want to do everything but halfway. So you have the specialists that do a much better job for SMEs or for savers in terms of the convenience and how the product works. And so, for example, for us, it means that, like, in the past, you could go as a German to Portugal with your car or by plane and open up a savings account and put the money in. But depending on how much you're depositing, probably you wouldn't pay for the travels. And so what we are doing is like digitalize this whole process, and so that the German saver from his home can open up that account, can deposit money very easily and quickly to a Portuguese bank, and thus can benefit from the rates that are there available, and that BNI is willing to pay to that German saver. So I think it's all about convenience and specialty. And then if you say like fintechs and banks and open banking, then it also means they have to collaborate, because it's very difficult to be the specialist in everything.
Certainly, and Benedikt, we'll go to you in a second. Naturally, Vanya, that disruption is, as you said, it's convenience, and that's for consumers. So one common definition I'll supply, at least for the audience, is disruption is consumer-led, Vanya, and one could certainly colorably argue that MasterCard is perhaps one of the ultimate disruptors, just by sheer volume of users on the platform, cardholders, institutions that work with it. Proverbially, perhaps MasterCard works with everybody. You had a quick comment you wanted to add, and then I have a
Yes,
question for you.
actually, I had a quick comment because here we are splitting the players between banks and fintechs and talking about collaboration between banks and fintechs. But in fact, we are averting a lot of collaboration between fintechs and fintechs in order exactly to build the best customer experience and convenience. And there are a lot of such examples. I can give examples if needed, but this is exactly the way how innovation should take place. Innovation through collaboration between different stakeholders, including government.
And is it fair to say perhaps that MasterCard is in fact a technology company more than anything else?
Of course, MasterCard is a technology company for already more than 50 years because we are building the technology, and through our technology, we are enabling all these stakeholders, providers of different services. And here I would like to clearly point out that MasterCard is not a payment brand only and payment company. We are solution providers, and also we are very much platform oriented, and we are building and providing APIs to different stakeholders in order to benefit from our services. Our services are I would say not only focused on card payments, and where they are focused on card payments, they are brand agnostic. They are not related only to MasterCard brand. Also, thanks to collaboration with different companies, technology companies, we have in our portfolio some of the most innovative solutions. In the previous panel, we were listening about the biometrics and authentication through fingerprint, face recognition, voice, and so on. But we own the latest technology for biometric authentication, and this is so-called behavior authentication. The way you behave, the way you bear your phone, the way you are scrolling even, 100% identifies you as a consumer.
And certainly, maybe even further than technology company, MasterCard is also a biomedical company. Next question goes to you, John, and then I want to go to Pedro on a similar question because it's on all the audience's mind. John, you opened up earlier that you're almost or practically full-time VC at this point, particularly looking at risk tech as you call it, but certainly more broadly in fintech. So if you could just menu highlight, what are some of the 2 or 3 particular granular areas that are most exciting from your point of view? From an acquisition potential.
Well, actually, so the fund that I run, just to be to make it very clear, it's completely separate. So we are autonomous. We make decisions on our own. We do have one investor, which is Mitsui Sumitomo, and they care about the directions that we go. But we're looking at, I tell everybody, we're looking at where does insurance go in the next decade. And so I'm investing in just about anything. So if you think about insurance in the grand scheme of things, where is it going? So the last 2 investments I made are in cybersecurity companies. One on the actual protection, one on some of the analysis to understand the risk. I did a climate data science company that's trying to understand and mitigate against risk from climate change. So if you think about all the things that are impacting risk in your life or trying to make your life better, those are the kinds of things that I'm looking at. So it's not a lot of fintech necessarily.
And just to unpack that one a bit more, climate's important. It has an impact on insurance rates, perhaps.
Maybe. No, it has a massive impact on insurance rates. If you look at the number of natural disasters in the last few years and the severity of those natural disasters, we'll see some insurance companies wiped out that if they don't understand what risk looks like or what the cost of these risks are. Cyber insurance right now, if you're a big company and you want cyber insurance, 9 out of 10 times you're going to be told no, because nobody has any idea how much risk there is, because they just can't price it. So there's huge things just to answer in the insurance industry when you think about where it's going to go that we don't have answers to today.
Certainly, and Pedro, an awfully similar question. There's a menu of perhaps tech companies, as we'll style them, that you could partner with. Certainly, what came up earlier, Raisin was one of them. but directionally, what's perhaps we'll drill down on one or two topics for quickly. What's something that particularly is a challenge that you're looking to solve that attracts you from the technology standpoint?
Yes, I believe there are really a number of opportunities in the different verticals within fintech. One area that we have explored quite substantially is on the alternative lending space, where we believe fintechs are using the technology, namely AI and machine learning, to actually get better risk models, whether it's to lend to SMEs or consumers. And we have seen really the ability for the onboarding and the ability to approve a transaction in a much quicker pace than the traditional banks do. So we actually partner with a number of these marketplace lenders across Europe. We don't have to have a physical presence in these markets, and we basically do due diligence on these platforms to allow us to diversify and to invest on these lending markets across Europe. One other area that we actually see disrupting is the payment area. We believe, we are now partnering with a fintech on the payment space, that this fintech itself offers a range of payment gateways, because we see in a way that the payments that the shops or the retailers are facing, or the cost is still high. So there are a number of disruptors that are trying to get lower fees for these retailers, and we ultimately think that retailers at the end of the day are going to pay zero, because ultimately you want to offer this product to actually allow these retailers to pay for other services like data analysis that allows them to grow the business. So just to have to give an example, many years ago, even before fintech was invented as a word, there was already what we call M-Pesa. There was a big invention in Africa for the sake of need, where a telecom operator actually did peer-to-peer payments. Nowadays in Europe, you also have instant payments, which allows you from one account to the other to actually do an instant payment without paying any fee, depending on the agreement you have with banks. You have the QR codes. You have companies like Alibaba or WeChat Pay that actually you pay through a QR code bypassing the traditional payment platforms. So you have a number of challenges, and big techs also coming into this, and we believe this is also going to be a vertical that will be disrupted over time.
Yeah, certainly. Payments, you mentioned, risks, which John mentioned too. So if you have a startup that can predict weather, I'm sure both of them would want to talk to you. I did mention earlier to allow some time for Q&A. I have a microphone. I'm going to walk down. Do raise your hand if you have a question for one of our awesome panelists. So hands in the air. I'll come to you and just say your name, and if I can see you in this light. So do we have any questions for our awesome panelists? There he is. Okay. Well, I'll start here, and if we have time for the other, I'll go to the next one. Just say your name.
Hi, my name is Philip. I have a question for Laurence. Can you share more information about the culture at Revolut?
Okay, so I used to be at Revolut. I was the COO at Revolut. I was there from a 5-man band to I left. There was over 1 million customers. So again, I kind of seen a bit of disruption there as well. In terms of the culture, yeah, there's been lots of articles out recently about the culture. What I can tell you is that the culture there is very, very work hard, and that's been the secret to their success. So actually, it's been probably more linked to what John is used to in the Valley, which is you're expected to work really hard and late hours, and often we would work weekends. But honestly, that was mostly down to choice. Most people there were just on a mission, and in respect to that, we got a lot done in a very short space of time, and that was some of the secret sauce around Revolut's success. I do think I can't really comment on Revolut as I don't work for them anymore, but what I would comment on is Tide and our culture. And we also work very hard at Tide. We're also on a huge mission. But I'm a father of 2 young boys, so I respect work-life balance, and I think it's really important. And I think it's in tech companies, especially early day tech companies, it's really important to get that balance. It's sometimes very hard to get that balance because there's a hell of a lot to do when you're in a startup. But yeah, that's basically what I'm going to say about it.
Certainly, and that's all the time that we have. For those of you who did raise your hands, just catch up with the panelists right after. They'll generally make themselves available. What I do want you to do is join me. Big round of applause thanking our awesome panelists. Benedikt.